Good afternoon and welcome to the daily roundup with ForexAnalytix. And we're seeing the crude oil start to reassert itself. It had already rallied quite a bit, but we came back here and now we've started going to make another move a little bit higher. But we came into an interesting level here, and I'll show that to you. Let's go and get into. See, you can see right here, we came up right here up into the 61.65, which is a 61% retracement of the move from where we opened up, where we had dipped down here to 58.75, came up just about, just about made it there, came about less than a dime away from that. And and then we quickly came off. We came off about, about 60 cents or something like that, or close to that. We've kind of bounced right back up again off of that level. And that was also coming into, there was a level just above here. I don't think we have it. Let me see. I don't know if I have it on this chart. Bear with me one moment. Yeah, it's not. But it came into a very good level coming in right here. And but they coincided, and we saw a little bit of a pullback. But the problem is that, let me pull this back. Those that got short on the way down and taken some pot shots, let's say against a 38%, well, they're underwater. So on any pullbacks, it's going to have an undertone bid because the market knows that these people are stuck, that may have shorted against the 38%, maybe said, you know what, let me take another stab at this. And they're going to be providing a bid tone for this market. So we have a chance to go up a little bit higher and stay firm potentially for the rest of the day, even though we did make a pretty nice good rally all the way up to 61, close to 61, 65 to 61%, and then saw this market pare back. But I figured it was going to be limited to the extent it would pare back because of that. Nothing is also in the S&Ps. We almost made it up in here to the 3004, which is going to be resistance. I mentioned that in the chat room right here. We just about made it. There's a 3004. I think we came up to, what was it, 3 1/4, something like that. We kind of pared back a little bit, but I'll tell you what, the S&Ps are at this point still holding okay. I would have thought we'd have had a far bigger sell-off, but we made this run up in here. One of the things someone was asking me in the chat room earlier, they were commenting, that equities are ignoring it. And I said, well, let the first hour go by, and then from there you'll probably stall. And I mentioned 3004 being resistance. I go, and then probably late in the afternoon we can maybe potentially see this market slide, and we may just go and do just that because obviously the risk, there's still risk there. So you can see here we have a nice little, if you look on this on a 30-minute, almost like a rally back up here, almost like a little gravestone doji. So we still have an opportunity to go on and pair back as we get later on in the afternoon here. Let's go on and move into the other currency pairs. One market that has really dipped down has been the euro. Let's go and take a look here on the daily. We mentioned earlier, this was the analysis going into the week, which was the euro staged a strong rally on ECB day, but lacked follow-through into Friday's close. The pair needs a daily close above 11.13 to generate further upside. Critical support comes in at 10.33. A close below 10.36 opens the door, or opens immediate challenge to 9.67. Well, I had our bias chart support today at 10.33, but this market has continued to, dip lower. And I myself came in at 10.15, and I added just a little bit below here. I think it was like, I think we're right around 9.98 or 9.99, something more right around this area here. We bounced back, but man, this euro is really acting like a dog with fleas, to say the least. We may be a little bit sold out. I think on this pullback, I think Blake had mentioned that this would be a 61% pullback. Let's go and take a look at that. There we go. And it did go and pull to the 61%. That's it. 997. So be wary if you're short. Hoping we'll get a little bit of a bounce back. And we do have the Fed coming up. The potential is, I mean, most expect them to cut at least 25 basis points. And some were saying, hey, we may get a hawkish cut. Well, you know, now you got to figure with what's going on with the whole issue with the drone strikes. Maybe it may not be quite as hawkish. So, I mean, it's Monday. You get these weird moves on a Monday, and quite often the market bounces back. You hear the thing about turnaround Tuesday, but usually we do see some extreme moves on a Monday. And boy, did this thing really dump. So we may see this market come back. Resistance now is going to be the 1033, which was going to be the bias chart, you know, support here, which seemed like a good support when we came in. We coming into the European crossover webinar. What were we, around 970 or something like that? I mean, 1070. Maybe even a little bit higher. So that was going to be off 40 pips, you know, and still the thing continued to go on and slide back. Let's go on and take a look here. Some of the other markets, and I actually have put the gold marker here on the page here, but gold has been relatively quiet. I would have thought we would have seen a far bigger jump. We kind of rallied back up here into, really didn't even quite make it up here. I would have looked at probably around 1508. So we came up a little bit shy. I mean, what we rally up to, I mean, after this dip, rallied back up what to about 06, 06 and a half. And the market has been relatively quiet itself. Dollar-yen has come back a bit in here. This morning we had our bias chart resistance at showed to you as 804. I think we got up to 810. I think Amanda was looking for 810 to add back onto her shorts. We got up to, let's take a look at this. We got up to 809, and I think she was looking for 810. The bias chart resistance was 804. So we paired back from both of those, but nice call on her part on the 810. But really, we haven't seen that big of a reaction. And we saw a little bit here with the dollar CAD, and we'll move into that. And we rallied back. We rallied back and had a pretty nice firm rally as crude oil initially started to slide back. We actually had our bias chart resistance at 32.87. If you're with us on the European crossover webinar, and the high was, oh, not bad, 32.87. So, and we'd since come off quite a bit from that level too. We've been down as low as, what was it? Oh man, we really came off quite a bit. If you look at this, we dropped down all the way into the 32.20s or teens. So yeah, not bad. 32.87 was the high, and that was our bias chart resistance at 32.87. One of the things with ForexAnalytix, if you're with ForexAnalytix, you're able to go on and you know, catch all the webinars, including obviously the daily roundup. We do offer that open to the public, but the European crossover is at 4 a.m. Eastern. And we pretty much set the bias chart, you know, scalp, short-term resistance and support levels. And if you're not available at that time, Stelios records it, makes it available in the chat room about an hour and a half before the New York Open. And you could still, even if you're not ready then, you could still go to the chat room and pull up that link. Or you can see in the rest of ours. Now you can see here where we go, what I was talking about with the crude oil. You see, now we're blasting up here with the crude oil. Because that was my concern here, is that even though we dipped, and actually I took a short up here against this level here because we had that 61, 65, 160 was the 61%. Also, I think I did what you would call, no, 61.10 was 161%, the early morning range. But that being said, I took a short, and I was able to clip off a few nickels off of this thing. But we came back. Remember what? As we just came online, I was just telling you online with the webinar, and I said, "Hey, look, problem is all these people that stepped in and short against at 38%, a little bit, maybe a little bit higher, are all underwater. So they're going to have, it's going to provide an undertone bid, and you're seeing that right now because they've got them, you know, that's just the way the market works. You know, they got someone on the wrong side of the tracks. they feel like they got the market trapped, then they're going to just keep on pushing it. You'll hear me sometimes say, hey, don't come in. There's going to be a bid. They're going to, don't sell it now. Wait till tomorrow or whatever. And this is a pretty good example. I mean, we came in and, you know, right, well, we were 61.23 or whatever. Now look at us blasting away because, like I said, those, as soon as we dip back, it's not like we sold off very hard. And that was, and think of it, this was a 61% retracement. And look, we barely even dipped back. So really then this is being made up with all the stops of the people that got short and getting their wings clipped a bit. With cable, we've continued to go on a weekend here with the cable. We had a nice run up earlier, you know, from last week, a nice, you know, basically almost like a squeeze. But we've seen this cable really go on dip back, although we do have our bias chart support down here at 23.82 for today. We'll go and take a look also on the cross rates. As I mentioned, there really wasn't, you know, despite what we would have thought, there really wasn't that much of a reaction in FX, with the exception of those commodity currencies that were directly affected, like the Noki, Norwegian krona, or let's say, you know, the Canadian dollar. But you can see here, I mean, obviously, the yen pairs also because of the risk on. You can see here a gap with the Aussie yen, but we came back. Same thing here with the euro yen. But some of these other pairs, like I said, you didn't see a great amount of impact, you know, from this whatsoever. We had a nice rally back up here in the sterling versus the Australian dollar, and we've since gone and paired back in here, slid back a little bit. Just more or less really just a little bit of a give back of what we had already run up in here. But you can see here with like the euro Kiwi, once again, you would think, you know, what drone attack, what explosion? I mean, there's a little bit of movement, but it's very minimal. And that's what I'm saying. I was surprised to see that really, even on the S&Ps, even though we had taken a dip, those had not been, you know, we did not see a great, you know, great movement as I would have thought we would have had a far greater reaction. Getting back into the S&Ps to speak of, here was that reaction level I thought was going to be important, which is 3,004, which would be a resistance level. You can see the touches coming across here. I think we rallied up to 3.25. And we do have here, and you're looking on this 2 hour, you can have a little bit of a gravestone doji, so to speak, after this little bit of a rally. So I think this will be critical. Look late in the afternoon or afternoon, we potentially could pair back a bit. But look at crude oil. Boy, look at this crude oil. It is still popping along. Look at that. Now 62.07. So those people that, like I said, came in and you know, after they dipped this morning, we saw the dip and the market comes back. People thinking, well, you see, it was overdone. Now I can step in and short it. And they came in against a 38%, and we saw a dip, but think of it this much. We didn't get that much of a dip. And anybody that came in thinking, okay, you know what, we're just returning right back up in here, and then we'll probably go on and take another dip back. And this market being run up on those poor folks, and they may have stepped in and said, okay, now come in. And you have to, that's when you're looking at a market, you get the idea of where, you know, the market always wants to hurt the people that, you know, that are in a difficult situation. It's just the way it works. I mean, that's just the way some of these markets move, especially markets that are, sometimes you'll see it with the euro when we're, you know, ECB days or big movement days, but people that are caught on the wrong side of the tracks, the market's just going to squeeze them. It's just the way it happens. You know what I mean? So, but same thing here with the crude. We had that big old run up. We come back down. People thinking, oh yeah, it was so overdone. I wish I would have sold it. So then they come back up. Oh, pretty good. 38%. They see a little bit of a dip and thinking, oh, okay, look, it's just hold its own before we go lower. And then we make a run up and, well, okay, I'm going to hang on. Bunch them a little bit lower, and then anybody that came in and shorted, now they're all stepping in trying to buy this dip. Well, that's after 61%. So if you don't even dip that much, you're thinking, holy smokes, how much further higher? So we're probably going to shoot for the 78% because it certainly didn't react at the 38, the 50, or the 61. And that's probably what we're ultimately going to end up shooting for. Here's on that 78%. We'll see if we can see something in here. Let's take a look. So 78% comes in at 62.43, and that's going to be off of this move here from this morning's lows here at 58.75 to the, I believe the high was at 63.25, I believe it was. It was 63.25 or 63.25. You can try and pull this back here. 66.33. So looks like they want to make the move for the 62.43, the 78% here. And this is not a bad little area too. Look at all these touches coming across here. You see here? Not bad at all, really. Potentially 62.52. 62.52 to maybe up to 62.76. So, but once again, like Sam said, they're probably just putting the squeezes on those folks that got short and just stayed short. But that's all we have for today. Thanks for joining us here on the Daily Roundup. We'll see you tomorrow. And once again, now's a great time to go and try ForexAnalytix with the offer that we do have. You're able to get check out the site and check out some of the tweets we sent out. But this is the time of the year, and certainly you'll be able to go on and take advantage of not only the analysis, which is basic technical, macro, Elliott wave, and harmonics, but as well as the chat room. To me, that's the real strength of it, the chat room. But as well as the patterns in play, with some of the guys going and put those for expected moves. So go on and take an opportunity, go on and get with ForexAnalytix, and we will see you tomorrow.